Good morning, everybody. It is Sunday, October 27th, and we're going to go over our data that came out on Friday, October 25th for our commitment of traders. Just a quick reminder that derivatives trading is inherently risky and past performance is not indicative of future returns. We'll start off here with the S&P. Commercials have maintained their net short position again as we head into the end of the month and the election. There are a few other major events this week that financially impact the markets, if you know where to look. This positioning and time of year is also the final window of risk before the structure becomes more favorable in a couple of weeks from a flow and dynamic standpoint. For this week, we'll look for rotational price action between 58.20 and 59.22 with our pivot at 58.62. Under 58.14, our pivot is 57.60 with an end target of 57.23. And over 59.22, our pivot is 59.53 with a target of 6,000. The other instruments that are signaling some nice positioning are the Australian dollar, so the 6A, and wheat, so SRW, and natural gas. And so we're going to focus on natural gas here since it's beginning to give a signal that began on Wednesday. And we mentioned this in our room that a bottom, at least in the short term, was in, and we should be focusing on upside. Now that we have the data that commercials have reached a new 3-year max long position, we can begin watching for that upside to continue. Remember that there is a physical product that can be hedged in these reports, and go back to some of our older videos about oil or gold to understand those dynamics if you don't already. For the week ahead, our biggest level is 3.21 or 3.202 to be a little more specific. We will watch for rotational price action between 3.202 and 2.863. Our pivot is 3.026, and if we get over 3.202, then we'll watch for our continuation for commercials to mark up the market to 3.462 in the short term and an eventual target of 4.21. Below 2.863, and we'll watch for accumulation again between 2.863 and 2.696. In the last video, we went over flows of the market, the money coming in and out daily, and the effects and importance of knowing when these will come in and in what size. With the World Series underway, we'll focus on positioning this week as our larger topic. We monitor positioning on multiple durations and strategies besides just the commitment of traders report. We think of the COT report as the lineup card the manager submits before the game. We can see what is likely going to happen at the beginning of the game and make plans for the duration. But if there are 5 runs scored in the first or bases are empty with Aaron Judge up, we may see a shift or skew in that positioning and in what is likely to occur next. These smaller time frame positions and monitoring the changes of those help us to put together our game plan and play Moneyball more effectively. It's important to monitor these shifts like a second baseman moving more towards first if you have a left-handed pull hitter up, so you know when to fade them in the opposite direction. Or if you get an easy pitch to hit for a home run, you can ignore that shift and take the best trending trade. Remember that you're swinging at the pitches when you take the trade, and even the best hitters in the league don't have a 1,000 batting average. But you can be the best at your game and your own MVT, most valuable trader, by understanding when a fastball in the zone is coming for you to hit or a curveball outside the zone is coming for you to chase. That starts with a proper understanding of the game, situational awareness, improving your edge, and understanding the shifts. If you want to learn to play the game and at a high level, improve your average and hit home runs as we showed on our X account this week, check out our course offerings and Discord at Stick Trading Academy. Have a great week out there, everybody.